Heidi ho, everyone, and welcome aboard. It is another Sunday market update, and we're very, very pleased that you could join us for this event. And I'm going to be joined today by Orlando a couple of times. Actually, Orlando's contributing on a couple of things this week. Of course, the US dollar as normal. He'll be telling us what we should be looking out for with the US dollar, of course, the reserve currency of the world. Well, at this stage anyway, there's a lot of speculation around whether that's going to remain the case for a long time or not. My own opinion is not, but yeah, timing on that's very, very interesting. We've got, as always, an interesting week in the markets. We've got, if you have a look over your shoulder, you used to have the S&P and the NASDAQ 25% higher. You used to have oil at about half of its current price. In fact, back a year, maybe a little bit more than that ago, it was worth nothing. How can that be? Well, it's happened before, believe it or not. And you've got the US dollar up around about 10% this year alone. Very, very interesting. So how do we deal with that? Well, let's talk about the US dollar, and let's ask the expert on that particular subject and go to our first video recording of the day, as we say a very, very warm hello to our good friend, the deepest voice in trading, Orlando. Here he comes. He's there. I know he's there. Big O, come in.
All right, traders, good morning on Trader O here, and let's talk about the US dollar. So I'm still very bullish on the USD, and for the past couple of weeks, the US dollar, in this case the DXY, the US dollar currency index, has been trading sideways. If you look at the top left of my chart, you can see this square that I'm pointing out. So what am I waiting for? Let's have a look at this chart, the 4-hour chart. And on the 4-hour chart, mates, what I'm looking out for is the break of this flag. Yes, I know that this could seem like invalidation of the flag, but I'm not really looking at that as structure-wise, right? I'm really looking at the price on the DXY failing to break May highs. These highs right here, the upper white line on my chart. So what I'm looking at here for the open, we go to the lower time frames on the hourly. Still looking for longs, right? I'm definitely not going to look for shorts should the US dollar depreciate more. No, having said that, the line that I just pointed out around the 103, 104, let's call it the 104, should be also a nice deep buy, but that's not my preferred setup. My preferred setup should be, or is actually, a buy at a break of this area. Let me point it out, this big zone right here. So why am I looking at this breakout for longs? Because if you look at historic price action or previous price action, this level has been rejected in the past quite strongly. So, should the US dollar rally, right, breaking with this zone, it would break with the immediate bearish structure, which I'm pointing out right here, lower highs, and lower highs, right? But I really need to see some kind of a rejection of this zone. I know that this zone is quite large in the sense that, yeah, I'm using the previous base as support and this high as resistance. But should we want really to look for possible good risk to reward ratio opportunities, this is the exact zone that I will be looking for. It's more narrow, Yeah, this is my bull bear frontier. Let's call it like that, right? So should a price rally reject this zone, this is where I will be looking for buys on the US dollar. Of course, that as always, I won't be buying the DXY. I will be looking for shorts on the Euro USD. Perhaps let's have a look at that. Possible shorts on the Euro USD on this flag formation. This flag formation right here, right? So the short on the Euro USD looks very good. More so because the upside is being capped by this previous key level, right? Rejection here, and rejection here. So the zone that I will be looking for shorts here on the Euro USD is this one right here, which would in fact break with the immediate bullish structure, which is this flag that I'm pointing out. Another market that I will be, well, I was looking actually on Friday shorts or on, not Friday, I think it, well, let's call it Friday, shorts on the GBP USD. I didn't get triggered here, and this market does not show any kind of weakness. The Aussie versus the US dollar could in fact also be a nice market to buy a rally on the USD. Sorry about this. But what concerns me is this or these lows, which are May lows. They are really, really, really close where price is trading at the moment. So last market that I will be looking for shorts is, so hold on, let me just flag them. The Euro USD and the Kiwi USD. The reason that I dig the Kiwi USD, I'm going to show you, is because of this, right? This bullish flag that is forming at the lows of this range really looks like it's trapping buyers at the lows, right? And a break of these lows would mean a break of the flag, which would mean more selling volume in this market. That, of course, will only be triggered in my case if the USD or the DXY rallies and breaks this structure. So also another thing that I dig about this are targets, right? If we look at those 161.8s that I have, the first one is the 161.8 of the first flag that hasn't been reached. And the second one is the 161.8 of the second flag. So we have confluence of targets at around the 107.50, which would mean that a break of this flag could give or yield a 2.2% move to the upside. So that's my plan for the US dollar. No shorts, only longs, and trade safe. And I'll see you guys around.
Indeed, you will, Big O. You'll see us very shortly. Well, we'll see you anyway, very, very shortly, as you're going to talk about the Dow Jones, which is very unusual for this program, but worthy of comment, most definitely. I spoke at the beginning about the fact that 1 year ago, or not even that, go back to January of this year, where the S&P and the NASDAQ were 25% higher than they are currently, or thereabouts, where the US dollar was 10% lower in terms of the index than it is currently, and where oil was almost half of its current value. Interestingly, I've been joined by Ainslie, which is fantastic because I want to have a chat about oil and gold.
You mentioned oil.
I did indeed.
Oil.
And not only that, I drawing a line through all of these indices, and then I come across gold, which is like $10 difference to what it was at the beginning of the year.
Yeah.
Of the year.
Oh, look, it's just one of those things. Do you mind if I grab share a chart?
I don't mind at all. Fantastic. Great. Great, you could join us.
Yeah, I just had a spare mo and I thought I would come over and see my buddy. I'm just going to put it right there. So, look. what can I say? This is my daily chart. Look at this. Look at this. Look at this. it's just going nowhere fast. It has been pedaling. Now, what's really been interesting, and especially with Orlando's last cross of US dollars going higher and higher and higher, and it's pushing up, and we've got 10-year bond yields a bit scatty, but pressuring this. But what you don't see with this at the moment is with the USD pushing higher, you don't see gold going down to 1,700, do we? We just don't. It's just range bound. It's been sitting there, and it's been sitting really, really tight.
I'm so tempted to add the word "yet" to that, but I'm not going to. This is your thing, not mine.
Yeah, look, I'm waiting really patiently, but I mean, you can. But look at this. I mean, we had a bit of a dip end of last week. Had radical, and it's just, I don't think you're going to get it any more technical than this. Then we've got a consolidation box. It's sitting within the consolidation box, sitting within another consolidation box. If you actually draw this line down through here, look at that. Nothing past there. Nothing past that one there. This is a daily chart, by the way. So we're just sitting there, just going nowhere fast. As I said, we went sideways, had a little bit of a heart attack up here, but don't you worry, we came straight back in at the beginning of the year. And we've just sort of like faffed around going nowhere fast. I know what we've always said about gold being the inflation hedge. And let's face it, gold I think it's doing a mighty job in the face of everything else that's going on. But it's not the inflation story, okay? It's not the saving grace. It's not people are buying huge amounts of gold like we've seen previously, even though inflation is where? What is it, 8.6?
Well, it depends on where you look, but it's not pretty. But isn't this really a story of the inflation that you have when you're not having inflation?
Oh, exactly. And it's just, as I said, if this is gold against the US dollar. If it was the US dollar and the US dollar is pounding higher, as we've just seen in Orlando's beautiful charts and lines and sort of, the one that goes that way.
Structures, yes.
For want of a better word. Would you expect this chart to be sort of like dying off the other side? You would, but it's not. We've got a lot of stitching. We've got a lot of, look at the MACD. MACD is flat as the proverbial pancake. Like I can put my line straight across that. The 200 simple moving average is hugging, let me just move us out the way, is hugging the monthly pivot. I mean, we've got nothing at the moment. There is nothing. So let's just wait and see for the old gold, because even on the weekly, and I'll just do a quick squeeze across here with my chart, because this is the weekly. Look at that. That just tells a very ugly story, doesn't it? So when I've got the DI plus and the DI minus both pointing down, and the ADX well below the 25 line, and this just sitting right on the 0 line, it tells me that it's, even on a weekly chart, gold is flat as the proverbial pancake. So it's not going anywhere at all. So it's unfortunately, I hate to say it, next.
Just leave it alone, right?
Leave it alone. There is nothing there. And I know I've seen a couple of bits and pieces where people think they're getting excited because it's broken out, and you can see the size of the bars. You have lots and lots of little ones, and then there's a massive one, but it comes straight back down again. It's coming back. There is no bias towards the bulls or the bears in either direction. So it just is collapsing on itself at the moment. But the other one bubbling along, speaking of bubbling and other interesting things, Geoff, I'm glad you mentioned this, would be, not this, would be, unfortunately, can you believe it? My, where'd that go? I'll try that again.
I don't know. It's interesting, tore through your desktops.
It decided just to collapse on me. Okay. We had a bit of an interesting week last week. The energy information administration had a little bit of an issue. And this is really funny because
in Australia, yeah.
No. Where are they about? Is it Brussels? Vienna? Not sure.
Oh, okay.
Okay.
We had our own issues in Australia, right? Where the regulators took over. Yeah.
We did. However, with oil, there was a bit of a small little, they couldn't release their data because they had a blackout.
Oh, there you go.
Drama.
Nothing ironic there.
No, nothing ironic there. So they couldn't release the information that they needed regarding what is going on. And we had an immediate drop, and it was quite a solid drop. And it's one of those things where, don't you just love a textbook breakout?
Yep.
And that's what we had. There was an interesting thing. I mean, it's been beautiful. It's been a lovely drop since this high test bar ringed high over here last week. And then it's just gone. But, beautiful breakout, beautiful drop beforehand. Off it goes and down it went. And it's the lowest it's been for, quite a few weeks now, sitting back down here. But one of the things, and we'll know next week, one, there's an OPEC meeting, but two, we've had a bit of a turn up and there's a bit of scratchiness heading towards north again. Couple of things, OPEC meeting coming up, but they are very suspicious about large stockpiling that hasn't been reported as well. So not sure what's going on there, but it's sounding very interesting. And obviously with the Russian-Ukraine war still going on, I was going to call it an incident, but it's a little bit, I think it rates above an incident, don't you? What we've also got, what we've also got there is on the table, Russia are about to pull 40% of the EU's natural gas supply. So that's going to make things really, really interesting next week. So just so you know, the correlation with natural gas and oil, it's mined together, it's drilled together. It happens simultaneously. Nobody's buying Russian oil except the Chinese, apparently. So,
how are they paying for it? In what currency?
It's the Chinese. They'll probably pay for it in whatever they want, including ruble. What can I say?
What, not US dollars, you think?
I'm thinking not. I'm thinking that it might be a bit of a private chit chat going on there. So let's see what's going on. I look, what can I say? We sit and wait. We have an inside bar. After all that happened, we have a bit of a turnaround from, as you can see, the MACD has gone from the southern hemisphere to the northern hemisphere. We've got a bit of a push up here, but just waiting. There is still a bit more of an upward push. Call it a retracement on the daily. Let's not call it a change of direction. Watching oil closely for next week.
Awesome. Did you know that NATO meeting midweek? I think for a couple of days. You know what NATO was formed for? I looked it up. I didn't know.
Please tell.
I'll quote. I want to read this because it's kind of important. NATO is a 30-member alliance, wasn't initially, I think it was 7, formed after World War II to protect democratic freedom and to provide collective security against the threat posed by the Soviet Union.
Yes.
Wow.
Isn't the Soviet Union one of the members of NATO? So therefore,
that I can't. I wouldn't think so.
Therefore, they can't actually.
But maybe it is.
I think you'll find they are, and you also find that they can't. They're allowed to veto anybody suggesting that they should be removed from NATO.
Well, of course they are. Yes.
Yes.
But there's a double whammy. I didn't know that that's why that organisation was formed. And you know what? It's not even mentioned in the certainly not on what's that thing called that we look at, the calendar.
Forex factory calendar.
Forex calendar, Forex, whatever they're called. It's not there. Forex factory, yes, indeed. It's not there, as though it didn't exist. It doesn't exist this month or this week. It's happening. So I've got a funny feeling that there might be some interesting conversations. Certainly, and we've got G7 meeting as well. So
What's
there'll be
happening
some.
this week? Yeah.
Yeah, I wonder what they'll be talking about.
It'll be interesting, but let's keep an eye on the markets. Geoff, I'm going to have to fly, but it's
All
great
right,
to
mate.
see
Thank you
everyone.
so much for coming in. Really
Okay.
appreciate it. And Lionel's telling us Russia is not in NATO. I'll have to look that up. I
Oh.
don't know. Thanks, mate. Much
See you
appreciated.
later. Bye.
Okay, let's go back to Orlando now and check in on. He's talking about, and we've been talking a little bit about the S&P 500 and all things around that. This time he's going to have a look at the Dow Jones Index, which is a little bit more finite.
All right, traders. The second market that I'm really looking at is the Dow Jones Industrial Average. If you trade futures, probably you look at the YM, and if you trade CFDs on a forex broker, you look at the US 30. This is a chart of the US 30, and the reason that I'm looking for this market is because of this. If we go to the 4-day chart, I'm going to the 4-day chart just to show you the level that I'm trading. Currently, well, on Friday, I took a long, right? It was an intraday trade late on the New York session. But what I like about this is that the Dow is rejecting those pre-pandemic highs. And after the pandemic lows and that recovery, this level is where we saw a ton of volume being traded, right? Eventually, I'm sorry about that. Eventually, buyers took control of this market, and from all-time highs at the beginning of the year, actually I think it's January the 3rd, the Dow has pulled back around 20% to that exact same level. And the past daily candles, let me show you, the past daily candles are super bullish. What I also like about this market is how Friday's candle closed. If you notice, not only the Dow closed the gap, but it closed above that gap closed, right? On Friday, my targets were at that gap close. If we look at the 4-hour chart, I was trading the breakout of what seemed to be an inverted head and shoulders. I personally don't trade head and shoulders or cup and handles, anything like that. But the break of this structure to me was extremely bullish, and the result of that breakout, right? I had my targets right there at the gap close, but the Dow closed above. So what is the plan for next week? The zone that I'm looking at is this one right here. So I'm not going to be eager to jump in long on the Dow, even though I'm very bullish on it because of what I just told you. But what I'm going to be looking at, actually, let's go to the 50-minute chart. What I'm going to be looking at is a possible pullback towards the 31,000 level, right? Or this zone that I just pointed out, which is these previous highs where sellers were really positioned big, and that is the level that they were protecting. So personally speaking, I think that this is the level where we're going to find some big buy orders, right? I'm not going to be eager to jump in. And if the market opens higher and starts to rally, that's fine. I missed the trade. But if the market opens lower and it starts to dip, this is the zone that I'm going to be looking for buys again on the Dow. And because we are above that 4-hour zone, I'm going to look for possibly long-term or mid-term buys in this market. So my first target would be around the 32,500, which I think that we're going to find short-term buyers taking profit and sellers jumping into the market. And because of how as steep this move to the upside is, we will probably see some pullbacks that I don't want to get involved in. So having said that, this would be my first targets, and there's a couple of other zones that are going to be trouble for buyers. The second one should be around these previous highs, around the 33,500, right? But if buyers take control of this market and this zone is breached, look to hold on to that long position for possibly all-time highs break, right? Again, the third zone should be March and April highs around the 35,500 level. But just by looking at how bullish Friday's session was volume-wise, right, and how it closed. Again, I'm going to show you on the shorter time frames. The edge here is trading to the upside. That's my opinion, and those are the zones that I'm going to be looking for to monetize this idea.
Awesome, Big O. Much appreciated, mate. Really, thank you for that. I've got to say, I would love to have a conversation with Orlando, and we sleep at different times of day, of course, so that doesn't often happen. But is this a short covering rally? I think that's the question that is in my mind. I just feel that we're not at the end of this bear run just yet. We'll see. Of course, there are differing opinions all the time. I just wanted to point out this week what is actually going to shape it. And I believe it's going to be shaped by many things. We've got a speechathon really at the end of the day, because we do have the G7s going on. And we've also got what is known as, what's it called? The ECB, hang on a sec, ECB Forum on Central Banking, which is taking place in Portugal. And we've got all sorts of central bankers speaking at that. And therefore, I think we're going to see, if the NATO are going to talk about the war and they're going to talk about other things, of course, then the G7, that'll be top of their mind as well, as will all of the other things that are going on in the world, not the least of which is the impending doom of recession that's going around the place, and how inflation's going to be controlled by all the central bankers. I'd say they'd be scratching their heads going, what are we going to do next? How are we going to fight this beast and all the rest of it? So, it's going to be a week of I don't know if we'll get too many results out of it, but it's certainly going to be a think tank over there. Let's see what the press releases bring us day to day out of all of those things. As I said before, the one thing that is not mentioned there is NATO. And I was actually blown away. I knew that NATO, the acronym, stands for the North Atlantic Treaty Organization. But what I didn't understand was why they were formed. And when I read that, it kind of blew me away. Anyway, whether it means anything or not is another story. I'll be certainly looking at it throughout the week. Rightio. Look, we have been joined by video once again, and talking about indices and stock markets. There's none better to analyse that than our good friend George from South Africa, from Johannesburg, indeed. And it's with great pleasure that I introduce him. He's only got a short video today, but let's see what he's got to say about the stock market in general. Good day, George. How you doing, bud? I don't know what his answer is going to be on video, but here he comes.
Good day, traders. On your screens here, you have the present state of the global economy. Now, these are plus 1,300 of the world's largest publicly traded companies across these 8 stock indexes, which you can just have a quick read at the bottom here. If you ever look at the charts purely from a price action perspective, you get a quick sense of what's happening. The most dominant feature on all of these charts is the strong bear trend that we are in. You have a look here, UK 100, sell-off, Hang Seng 50, sell-off, S&P 500, sell-off, Japan 225, Nikkei 225, sell-off, German 30, sell-off, Nasdaq 100, sell-off, Euro Stocks 50, sell-off, and Aussie 200, sell-off. Now, until such time as the bulls are able to get above the high of the bear breakout on each of these charts, we are in a bear market. Now, you can ask George, what of these huge bull bars that came in last Friday? Well, with every big trend, there are, of course, pullbacks. So essentially, and again, until we get above the highs of the bear breakout, these are just pullbacks. So let's have a look at one of them, UK 100, big sell-off, pullback. Until we get over that high to start off with. The bulls are able to put a high above that, fantastic. As long as you close above it, bulls are getting strong, but that's still the determining factor. And you can look all the way here, Aussie 200, same thing. So when I go into the market tomorrow, of course, I trade what I see in the charts. So I'm not going to ignore these bull candles all over the charts here. I'm going to go in looking to see if there's continuation by the bulls. And if there is, I'm going to buy. But I'm going to buy with at the back of my mind, knowing that I'm in a bear trend. So if I start to see a reversal at a key point setting up, trend reversal, I'm going to take profits on my longs and sell. If we don't get it, we just keep on buying. But big thing, present state of the global economy, big bear market. Presently, we are in a pullback and we have to wait and see what takes place. So these last 4 days of June are hugely exciting. It's getting to the end of the half of the year. So big forces in the market coming to play. Lots of complexity, but huge opportunities to make a lot of money if you are careful how we trade. Take care, guys. We will catch up in our shows this coming week.
Thank you, George. Look, mate, I've got to say I'm pretty much on your side. I think this is a bit of a short covering rally that we're seeing on stock markets. We don't know that yet, of course. We'll find out in due course. Now, what am I looking at for the week ahead? Well, there's not too much, I've got to say. There's a couple of things that I am interested in. These are the game changer bars that I like to trade. Well, not necessarily trade, but I get a general direction of where the market may or may not be headed throughout the week. And this is the first of those. It is Euro CAD. Now, I've been a bear Euro CAD for the longest time. In fact, I was in the longest position I've ever held, I think, for 11 months and so many days. Last on Euro CAD short, I'm pleased to say I got the direction right. I don't know that that's over. And we do have what I call a game changer bar, which basically, for those of you who like to look at technical analysis books, I think they're called key reversal bars. And this is one of those. The issue I have with that at the moment is not the bar itself, but this structure, which of course is an expanding or widening pattern down here at the bottom of a very long run. And we've come off the bottom of that, obviously. I would expect that I don't want to go short until we hit that level. And for that reason, I don't think I'll be trading this bar, but you know, it's very much akin to my bias on this pair. So maybe I should make exception and just place an order underneath that stop loss above it. Don't think that's wise. If I was going to do that, the stop loss needs to be there, which doesn't really give us a strong reward to risk till we get to the bottom of that range. So I'm not enamored by this. What I would be enamored by is if we get a very strong and quick rally up to here, then I would look to trade that short, but I don't think it's there at the moment. The other of the game changer bars this week is this one, Kiwi CAD. You'll notice that the CAD's involved in a lot of these. Well, sorry, there's only 3 of them. This one, you're kind of fighting against that strong bullish engulfing, which is very interesting, if not compelling. Again, we're in a strong downtrend, as George was talking about. I just don't know if this is retraced far enough. If I was looking to trade this short again, I'd want to be looking at that level, I believe, for the retracement at minimum to get back to there. So to get into here, pardon me, to get into this short at the moment doesn't make sense to me. I'd have to risk about 170 odd pips, but then the real conservative approach to that would be 267 pips, and I'm trading into a 69 pip low. That's just not a thing I like to do. Would I like to trade this short? Yes, probably I would, but I'd like to see it get up to here before I did. There's one on the radar that suggests we have what's known to me, because I coined the phrase, as a game changer plus. And that means we've got a key reversal bar, which is this one here, this massive bullish engulfing bar. This is pound CAD, by the way. And then an inside bar, which suggests to me that if I place an order long above here and a stop loss here, then I'll be in pretty good shape. And I'm absolutely not against that short term. I can't see this, rallying for a long, long way. Maybe there to start with. And I absolutely don't see it reversing, because I think the CAD has got far more credentials than does the pound. But in terms of a relief rally, then maybe this is possible. Maybe it does get back to here. And then I've got to work out, okay, is the risk that I'm going to take warranted for the reward that's possible? 188 pips gets me about 200. So there's a 1-to-1 chance here. Is that attractive against a strong downtrend? To me, no. And I really don't see it going any higher than that, to be fair. So for that reason, it's a no from me on pound CAD, despite the fact that I do see something that I do like to trade. Adding to that, I do like to trade these in context, as I should be trading everything in context. And the context is, where is the major trend, or where is the major or governing, if you like, pattern of the day? And it's probably very, very, very ambiguous in here. Okay, I've got a triple bottom that's just been broken. I've got a range that's just been broken. Really, I want to see a retest of that, don't I? Or a re-entry. So that's the key level for me. And for now, I don't think it's worthy of my attention, to be honest. Two things are on my watch list, and that completes the weekly game changer bars for me. Two things are on my watch list, both Euro-centric, and the first of them is Euro versus the Aussie. And the reason I like this one, or it's drawn my attention, is because we are at such a strong level. If I go to the bigger picture here, and you use your imagination, this looks like the Eiffel Tower, basically. But at the end of the day, when I do look at this chart, I think, is this really a head and shoulders? Is this really that obvious that we've got rejection, 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 break of the neckline, if you like, if that's the head, and we've got multiple shoulders here, then that's the neckline. And if the neckline's been broken, well, then it's now been retested on the monthly chart. Therefore, I sneak myself down to the weekly and see what I see. Well, I see exactly the same thing, right? Then have I got a reason to enter the market? Well, some would say that's a good start. I would say it's a good start, but I wouldn't say it's a compelling way to enter the market. What I would say is I'll be most definitely looking at this throughout the week on Monday, Tuesday, Wednesday. And if I do get a bit of a rally and a lower high based on this area, then I think that's a short to be had. So Euro Aussie I'll be watching most definitely. Euro Kiwi is not dissimilar. In fact, it's probably very similar. And if I go back to this chart, it's very, very similar, as you would expect. Aussie and Kiwi are fairly related, and the euro is the euro, of course. The one thing I don't have here is a strong level on that monthly chart. What I do have is a reasonable level, and I can't say this is a key level, to be fair, but it is a level, and we've rejected it 1, 2, 3 times. Those of you who recognize the way I trade, when I see that pattern, and you can start it there if you like, but you can also start it here. What I look at is a range, and that range is kind of unclear, but let's use the top of that line there. You could even go down to there if you wanted, and let's call that the range at the moment. Well, I've got 1 false break, 2 false breaks, 3 false breaks of that range. To me, that is a very, very significant sign that this currency pair, Euro Kiwi, is going to break this level to the downside. Now, how far it goes, I can't tell you. It may, in fact, break here and then go long, and that's fine. But my initial thought process is that I want to trade this short. I can't trade it short right now unless I'm a scalper, and I'm not a scalper. So what I'm looking for is price to come back into here. Now, the weekly pivot, I think that will be that's price. But yeah, the weekly pivot will be pretty much bang on that level tomorrow morning. So I'd love to see price fall just a little bit further, then come back and retest that area. Give me a lower high, and that will be my trade of the week. Euro Kiwi short, if it does set up. If it doesn't set up, then the scalpers win and I don't. But that's exactly what I'm looking for. Price to get down here, retest the top level, give me that lower high. And as I said, that's my best trade of the week, Euro Kiwi. Keep your eye on it. And I'm not suggesting you enter right now. I'm suggesting you wait for that lower high to form. Righto, guys, that's pretty much it. I've got the National Rugby League of Australia having their State of Origin match number 2 coming up very shortly. So I'm not going to hang around any further. I'm going to bid you adieu. I'm going to thank those who came in and rescued me from having to talk for an hour, and you guys for having to talk for half an hour anyway. Thanks to George for popping in. Thank you for Orlando for his excellent efforts. And of course, Ainsley for dropping everything that she had on the plate at the moment as well. And of course, thank you to Sam for facilitating us. We will catch up with you next week. Go the Blues, Gary, go the Blues. And we'll see you then. Have a great week ahead. Bye-bye for now.